Hello everyone, my name is Steven and this is the Opportunity in Investing. First, I want to start with a question. Do you have everlasting life? This is the first and most important question in life you should find the answer to. For what shall it profit a man if he shall gain the whole world and lose his own soul? The greatest news is that you can find the answer when you look to God's perfect word, and you'll find that the answer is found in the Lord Jesus Christ. I'm not a professional financial advisor, so always do your own research before investing. Past performance does not guarantee future returns. Investing does involve risk, so you may gain or lose money. For this video, we're going over the March 2026 performance review. Along with that, during March, I entered 3 new companies highlighted in the blue that in my opinion are undervalued. And then I exited one highlighted in the red, which will be going over its performance. And the green, in my personal opinion, are undervalued. For the first company, that is Construction Partners Incorporated, ticker symbol ROAD. This is a company that does civil infrastructure. They mainly build roads and mostly on the southeastern part of the country. So on March 9th, I entered this company at $115.13. Since 2021, the average annualized growth rate for earnings has been 64%, sales 32%, book value 27%, and cash flow 67%. Next is Technoglass Incorporated, ticker symbol TGLS, and I entered this company on 9th of March at $40.39. This is a company that does glass for skyscrapers and big infrastructure projects and stuff like that. So here in Vegas, they're building a lot. So anyway, on the performance since 2021, the average annualized growth rates for earnings has been 13%, sales 17%, book value 25%, and the cash flow at 1%. And the third company that I entered for March is Vulcan Materials Incorporated, ticker symbol VMC. And I entered on the 19th of March at $253.79. Since 2021, the average annualized growth rate for this company on earnings has been 15%, sales 7%, book value 7%, and cash flow at 17%. Now for the company that I exited, that in my opinion was overvalued, that is ticker symbol ULH. Here is the chart from when I entered on April 7th and when I exited on March 27th. I only bought the initial, and then May 2025 and June 2025 are the times I dollar cost average. After that, it became fairly valued, and for the earnings that happened after, it continued being fairly valued and the earnings kept falling, and here most recently it became overvalued. So that's my personal opinion. Ended up losing on this company, which we'll be going over shortly, and the S&P 500 ended up outperforming. So for all realized dollar cost averaging returns, ULH did have a negative effect to where over that time the S&P 500 for ULH ended up outperforming. But overall, still on the realized side, this channel at 27.5% versus the S&P 500 at 7.6%, making this channel on the realized side outperform by 19.9%, 70% being the S&P 500 and 80% making positive returns. Then for lump sum data, the S&P 500 had a huge outperformance and by 43% on the most recent realized pick, which was ULH. But overall, this channel 19.9% versus the S&P 500 at 16.4%, making this channel outperform by 3.6% on the realized side. And same as last slide, 70% being the S&P 500 and 80% making positive returns. Now for 2026 dollar cost averaging returns, this channel at negative 4.1% versus the S&P 500, which is at negative 4.4%. So we're beating the S&P 500 by just a little bit, but both are in the red. The Iran war obviously not helping the situation. So, and you can always pause and look at the data, and the golden bars are how much of a position I have in each stock in my basket. Those are the averages. So for the lump sum, just for 2026, this channel at negative 3.6% versus the S&P 500 at negative 4.5%, making this channel outperform by 0.88%, not by much. So 50% beating the S&P 500 and 41% making positive returns. Now for the total dollar cost average and returns, this is since January 2nd, 2025. This channel at negative 6% versus the S&P 500, 5.8%. And for the lump sum, this channel at negative 4.3% versus the S&P 500 at 8.7%, making the S&P 500 outperform by 13%. So 40% are beating the S&P 500 and 40% making positive returns. That is all for this channel, and I hope you guys have a good day. If you appreciate it, hit the thumbs up, and I'll see you guys in the next one.